Assalamu alaikum and very good morning. It's my pleasure to be here today. We are moving towards a digital Bangladesh, digital payment, digital banking, and digital space. Fintech and financial inclusion. My personal experience is mostly with financial inclusion and a part of Fintech. I would go to narrate my personal experience as well as I move forward with this presentation. The presentation has 5 sections with financial inclusion. We'll see the gap between financial service and the people, institutional arrangement to address financial inclusion issues, key financial access survey reports from South Asian countries, national financial inclusion strategy that envisages banking account for each citizen of this country by 2026, and future of Fintech, the issue that is highlighted in today's summit. This is the demographic picture of Bangladesh with 172 million people. You see, we have a larger cluster in the middle. We are one of the youngest nations in the world, having a large portion of people active people between 15 to 55. So this tells about the possibility. Why it is here? Because the young nation can do more, can do better, and has the capacity to achieve. So this is the first thing, the strength we do have as a nation, and we can change. But are we all included? When we say financial inclusion, as per Fintech's data, only 53% of adult population, 15 years plus, only 53% have bank accounts, access to finance, to institutional arrangements, etc. So, financial inclusion is very critical. But why it is not happening? One point is, it has got different dimension. The first one, affordability. Very few people can afford this service as it is costly as well. We have solutions, but we could not take it to the people. We have solutions, but we could not make it cheaper. We have solutions, but we could not make it available at the doorstep of the people. So, affordability is one of the major barriers and also enhancer for financial inclusion in this space. When we call financial inclusion, the 4 product service should be available. One is payment, savings, credit, and insurance. This will be frequently used by the transaction account. When you call somebody is financially included, they must have low cost, savings, credit, transaction account, as well as insurance products at the doorstep of those people. Financial inclusion has got a big role to play for enhancing the SDG goals. When you call that will make a country poverty-free, will you call about the equality, we call about women empowerment, we call about partnership, we call about the preservation of nature, we call about the distribution of wealth, everything that depends on financial inclusion, because unless financial inclusion happening, this will be a far cry and we will not achieve the goals as desired. The government has plans, so 8-year plan, 5-year plan, we have one statement that nobody will be outside the banking service, and it should create access for household enterprises which are in informal market. We have a big informal market, as we know. Most of the people operating in the informal market have no access to the banking services. So the plan envisages for one inclusion that nobody, these small businesses, households, persons will be under banking facilities. So we will now see how banks are doing. I have collected some of the statistics from Central Bank and World Bank pages. We have many banks, 61 banks. And this one is the wrong information. Anyway, we have 11,000 plus branches with 13,000 ATM and 14 crore deposit accounts. Now we have adult population of 12 crore. We have deposit accounts of 14 crore. How does it go? Because one person has 10, 20 accounts, business has 100 accounts, so that's why it is not one person to one person like thing. So banking accounts are there, but not distributed among the population. We have 3.8 crore debit and credit cards, almost 4 crore debit and credit cards in the market. Agent banking is another area included in the banking statistics that has endeavored for financial inclusion in the rural areas, and we have 21,000 outlets with 19 million accounts. That one point I would mention here, this is the only place where women and men account holders are equal. Now, in the latest statistics, this is one of the biggest achievement in financial inclusion. And 87% are rural account. So this case, one shows that if we can build the platform, if we can take the service to the people at the grassroots level, this will be used by the people, accepted by the people, and it can solve the problem to a greater extent. It enhanced remittance services, it enhanced small savings, it is now working towards credit disbursement as well. There are NBFIs. You have 35 NBFIs with 307 branches. The number of accounts are very smaller because they have got a very specific purpose to serve. We have MFIs. MFI, Bangladesh is the birthplace of microcredit. So with 800 plus MFIs, they have done a big job in the rural Bangladesh. With around 200,000 crore taka in loan disbursement, with a customer base of almost 38 million, MFI is doing a very good job for financial inclusion in rural Bangladesh. We have another development, that is MFS. MFS, if you see that 20 crore account, with a population of 19 crore, we have 20 crore account. Here, like bank account, there is a duplication and like things that the accounts are not equally distributed, but it has enhanced payment to a very bigger, to the greater extent, especially for the poor, for the marginal, for the underserved and unserved population of the country. It is a great leap forward. And it has laid the cornerstone for digital banking in this country. If we talk about digital banking, that will take shape as MFS. If MFS is only have a guiding principle from central bank like BRPD, it has got one payment department, payment service department, system department circular, of course. But if it is included in BRPD, I mean regulation, prudential guidelines, it will become a bank. There is a big potential for MFS to become banks. But it will be regulated, people will get more service, it will enhance savings and credit. One thing we have to remember, anything to do with bank is savings and credit. The rest of the service, many partners can do. But except have a banking license, savings and credit function some institution cannot do. We have cooperatives with 192,000 and 12 million customers spreading across the country. And there was one great project also in cooperative mode, like Amar Bari Amar Khamar, with 65 lakh customer, I mean 6.5 million customer across Bangladesh, having 45,000 village, coverage. This was one of the largest cooperative. And it got its banking license like Polli Sanchoy Bank. We have insurance companies, 81, 35 life and 46 non-life. But still you see the figure. The GDP, GDP in terms of premium to insurance premium to GDP, it is 0.4, not even 1. In India it is 4. In developed countries it is 12, 13, 15. But here, GDP to insurance premium ratio, it tells about the engagement deepening of the service. We have 61 banks, 81 insurance companies. Still, we have a big problem ahead, that 47% of the adult population is still underbanked, unbanked, and beyond financial inclusion services. The Payment Service Department of Bangladesh Bank doing a very good job by issuing license, PSP and PSO, and MFS licenses that are really helping the market to get more deeper, maturing, and these PSP and PSOs will play a very big role in future financial inclusion model. These are the players who will bring fintech to the banking arena. So after all this, what we have achieved? With so many financial institutions, have we achieved the goals, the targets? Let us see some of the comparison with the neighboring states. If we see, except for MFS, I have seen no other area that we can do better with the neighbors, except Pakistan. Pakistan is a different case, the terrains or etc. But even we are lagging behind Nepal. Nepal is more financially included. Their financial deepening is much more better than Bangladesh. If we see outstanding deposits, 40% of GDP, India 65%, 63%, Nepal 92%. And only one area that we are doing better is MFS area. The number of MFS account is mobile money agent outlets are larger in this country. Otherwise, outstanding loans from commercial bank also to GDP is lower than expected. So many banks, we have to think about it. The banks are there to solve the problem. Now, when you call that financial inclusion space, there is a gap. Government has come up with strategic goals and targets in financial inclusion strategy paper, National Financial Inclusion Strategy paper, NFIS, and this paper says that every citizen will achieve financial inclusion, will have a bank account by 2026. What does it say? Increased financial deepening. As I said, GDP to bank deposit, GDP to credit per square kilometer, ATM per 1,000 people, ATM, etc., some of the indicators. So how to do that? eKYC that has been launched and working very well, as I see many bankers here and financial practitioners. Everybody is engaged in this. Account opening process optimally simple, to make it simple. As a banker, we are conservative, and there are reasons to be conservative. With money, we are responsible. You see, anything happens in the market, the fingers are pointed to the bankers, what you are doing. So bankers generally become very conservative, but we can do better now with technology, because technology is helping us to have better KYC, better control of those processes. Third one, uses, the burden on uses of financial service. As we see the price, as I said earlier, the price is higher, so we need to reduce the price. Payment system and delivery channel to be developed and strengthened. As I said earlier, MFS is doing a very good job here. Other PSPs are doing fantastic job, but still not, to be honest, not going to the rural market. Government payment, we have seen during the COVID, it did a very good job by sending money through digital means. In many countries of the world, especially developed countries, in last decades, most of the accounts were opened by transfer of government money. So Bangladesh can also learn from this experience as well. Robust data and measurement frameworks should, we are talking about data sanctity, data security, data safetiness, etc. And also financial literacy to be promoted through those the institutions who are responsible for this, like central bank, commercial bank, NBFI, insurance companies, and MFS, PSPs, all other players in the market. Deepening financial inclusion for women and population in the chore areas, in the rural areas, unbanked, underbanked people living in the remotest areas of the countries and in the hill tracts. That is very important. As a banker, we are very much habituated to Dilkusha commercial area and Chittagong trading areas, not going beyond that. So banking should not be confined only to the township. And we are really digging the grave by doing so. As banker, in my past career, I understand that concentration risks in our banking balance sheet is much more higher today than ever. Digital financial service to upscale, that utility bills to be paid through digital means. That is one way of enhancing digitalization of payment. So all the utility providers, government, private, all, they can utilize this channel, digital channel, to enhance financial inclusion and literacy as well. Full-scale banking service through agent banking. This is one of the recommendations from National Financial Inclusion Strategy paper, that we need to do it more seriously. We have taken it very lightly. That's why we see many things happening around this space. Must understand where there is a problem, there is a good opportunity, because many people shy away from the problem. It is our nature. So instead of avoiding problem, let life be a little bit risky. Let us live a little bit risky life, because we are missing a lot by avoiding the problems. Policy and regulatory environment, we need to strengthen, and risk management, as I said earlier, regulatory body coming up with risk management and other policy guidelines. Insurance service, as said earlier, there is a big gap in rural Bangladesh as well as in different areas for insurance service, so we need to cater those services in different ways. There is a big business lying there. Capital market services, we are very, very shallow in capital market, so we need to engage more people in those areas. Microfinance service to be strengthened. These are the recommendations and strategies the National Financial Inclusion paper is envisaging to take our financial inclusion forward. The same thing here, I must impact of NFIS and SDG. We see that some people do relate 13 goals. I have taken here 10 goals related to financial inclusion, especially no poverty, zero hunger, gender equality, then disaster management, and climate change effect, etc. So now on the fintech inclusion, we see the guiding principles that we can draw from our experience is that public-private commitment is important, legal and regulatory framework is important, otherwise nobody can move. As I said, deposit and credit is banking part, so everywhere we move, there is some hindrance we find here. Financial and ICT infrastructure should be robust, widespread access points like agent banking, MFS point, and other access from micro merchants. Awareness and financial literacy to be built, adoption of transaction account. There should be freely transactable account, open. Promotion of the digitalization of payment and creating access for women and the poor. In most vulnerable areas, we see that women and the poor are left behind. So we need to include them, and anybody practicing financial inclusion, they must follow these guidelines to achieve success in that case. Now I would go to the fintech part. This part, how fintech is making, a marriage between fintech and financial inclusion or banking, something like banking as a platform. This idea and banking as a service, these two ideas in two-part story. In banking as a platform, that customer is of the banks. Bank owns the customer. The book is of the bank. And the platform is connecting. Different fintechs are connecting with the banks to facilitate those services. We'll see in the later pages that there are many fintechs in our country. Basically, they are working as a banking as a platform. So fintechs are providing APIs, loan platform, money transfer platform, currency, digital currency features, savings. They're making different programs to analyze the characteristics of people and helping the bank to make the product and services for better future. So this one in Bangladesh we'll see mostly practiced by the fintechs here. Another one is banking as a service. That means the customer are owned by the third party, and bank is providing the connection, APIs to those fintechs, those firms. They can give service to those customers like issuing cards and other services, other loyalty programs. So here, customers belong to the fintech and firms. So these are two ends of relationship. But here you see one thing, as I said, anything we do in financial service, we need two parts together, like deposit and lending. And the rest are done by those fintechs, firms, players who are in the market partnering with the banks. So there are two ends for partnering. One is with the technology, another one is with the service. Bangladesh Bank has developed this payment ecosystem, and very critical job they have done. Otherwise, all the players could not be here. Any fintech, PSP, PSO, MFS, and banks, all together, they need to go to central bank because there is only one clearing system. There is no private clearing system, so we need to go to the central bank. And central bank has done one big thing in QR, Bangla QR. You have seen the Bangla QR. That is very important development. So we'll see the last few pages that in our country, how fintech is doing. There are MFS players, there are aggregators, there are PSPs that are in the market and working for financial inclusion and for better marketplace. We have saving products with these companies, and we have credit products with these companies. A big development, I would say, in fintech market is happening, and today's program tells about that enthusiasm as well. So InsurTech is also coming, but not in a big way, but I believe with the bank assurance, bankers will be offering insurance products and it will get a bigger share in the market. Thank you very much. This is all, and last one will be the village model that we see that every service provider will be connected to one single agent and every village will have a financial kiosk. Thank you very much. Have a nice day.